An undervalued energy stock, perhaps, and owner of the largest power station in all of the UK that are also delving into carbon capture technology. This right here is the Drax Group. They also pay a modest dividend of a 3.31 yield at the moment. Now, they have got into a bit of hot water regarding environmental disputes over the forests that they're cutting down for their wood pellets for the power station. However, I don't know if it's done much to their share price because the story only came out last night and the stock price hasn't really reflected it all that much, at least for now. I mean, in the last 5 days, they're down 11%, although I think that's more to do with all the economics in the UK and the pound sliding and a few other things. But today, I want to look at them, see if they're a good pickup. We're going to do, in the past year, how have they been doing? Well, you could have picked them up for £5 on the 4th of October 2021, and now they're worth £5.95 at a height of about £8. We go to 5 year, we can see that they did drop in 2020, although they dropped down to almost £1.33. And they have had almost an 100% gain in share price over the last 5 years. That's some hefty increase, to say the least. As I was saying, Drax Group, they own the largest power station in the UK, in North Yorkshire. They also have biomass and coal-fired power stations as well. They run an international biomass supply chain, biomass being like wood pellets. And that's turnover revenue of 5.1 billion, employees of 2,931, founded in 2005, and seemingly growing. Market cap at 2.39 billion is definitely nothing to scoff at. So let's jump into it. Now, I am going to jump over to Trading 212, where it's the trading platform that I use for all my portfolios, videos. Gives you a wee bit of the company details, useful graphs, and there's no trading fees other than, the usual background ones, although it's not like other sites where they charge you quite a bit for each trade. So they're the ones I use. They're pretty handy. I don't go near any of the CFD spread betting. That's where they do make their money. I stay away from most of that, but they're doing a wee promotion at the moment for a free share for yourself and for me. So be sure to bag that if it's something you're looking into. Sometimes you can get a share up to £100, so it's pretty handy. Gives you a lot of information about the company, then goes on down to give these nice charts here. As you can see, they actually lost money in 2020, but they went back to profitable in 2021. Total assets and liabilities, nothing major to see there, but they are a nice cash generating business, so that's something to always bear in mind. I wonder how much they've actually paid out in dividends. 70 million in 2021. Good to know. Okay, over to their website, one of the best places to go when learning about a company. By the way, I should note that their ticker symbol is DRX on the London Stock Exchange. Just wanted to point that out. Drax is enabling a zero-carbon, lower-cost energy future. They are delving into carbon capture technology. For anyone not familiar with that, it's where it takes carbon from the air and essentially captures it because, lots of carbon in the air relates to the climate and a few other things. Now, this is a completely emotionless channel, so when it comes to investing, despite all the articles recently about them, I'm still going to approach them at a pretty neutral stance as just an energy-generating company. They are engaged in renewable generation, sustainable biomass. That's essentially, controlled forests. They cut them down, turn it into wood pellets, and then burn it in the power plant. How good that is, there's a few questions for it, but they make the compressed wood pellets. And as was seen earlier, they actually own the sort of supply chain for doing that as well as the power station. They have sustainable hydroelectric and hydro storage across England and Scotland. Good to know. Okay, we can go over to the investor side here. We can see everything from business model, corporate governance, investor resources. Anything you need will be on the investor section of their website. Very handy tool to use for any business. And I feature them regularly in every video. What a nice wee chart here. You can see pellet production is 0.5. Is that megaton? Has to be megaton. It's a lot anyway. They want to be carbon negative by 2030. That's a big goal of many companies going into the future. As you can see, they generate 93.8% renewable energy, mostly from biomass, but some from pump storage and hydro. You can go down here. Acquisition of 90,000 tonnes of Canadian pellet plant, half-year results, and updated expectations for 2022. We'll actually see the half-year results. Always good to know. Okay, so the first half of 2021, They had revenues of 186 million, and now it's up to 225 million. Net debt increased a bit as well. Operating profit went up, as did profit before tax. Good to see. Okay. Jumping on over to Simply Wall Street, we'll see what they have to say here. It's a very handy website that I use to do a deep dive into any company on the channel. Now, there is a paid version, but you can use the free one. I think it's three or five companies a month that you can view for free, and you can view them at any time. I don't have any affiliate link or anything with Simply Wall Street as of yet, but I'm currently looking at getting into that. So if I do get one, I will have it down in the description for you to hopefully get a couple of weeks free at it. It's a very handy tool, especially when you throw in your portfolio and you can screen through it. In terms of valuation here, the snowflake model that they use goes over the value of the company, future prospects, past performance, financial health, and dividend. All five are very, very crucial points to any company, so it's good to see that they appear to be undervalued with an adequate balance sheet and a decent dividend and past performance. Okay, all good things. It says here they're trading at 30% below their fair value. Now, it's an estimated fair value based off a discounted cash flow model. We will be looking at the intrinsic value later on in the video. I do want to point out that they are models and they are estimates. They are not the absolute, so take it with a grain of salt and look into other details of the business. But at the moment, earnings are forecast to grow. They became profitable this year, as we noted from Trading 212. They have a high level of debt and an unstable dividend track record. That's what's sort of going against them at the moment. As you can see here, you can see a few of the events. Dividend increases across the board. Okay, so let's go down here. Valuation. 5 out of 6, not too bad. 11.4 in the PE ratio, nothing massive compared to certain, peers apparently. The industry average is 46. Although the UK stocks in this, don't take that as an absolute. I don't even know who their competitors really would be, but you would probably look at other energy companies as opposed to some of the ones they've suggested there. Going on down, you can find this wee chart here, the 80.3% undervalued. On a discounted cash flow model, fair value is estimated around £30.42 pence. At the moment, it's £6. Have they? I don't think they've even been, I think the highest they've been sort of £8. So bear that in mind. But they have a lot of future growth. And, this was actually past performance. Let's see their free cash flow. Okay, the free cash flow, again, it's went up this year, which is good to see. They were making a loss back in December of 2020, but that can almost be excused due to COVID. But they've hit the ground running when it comes to, after COVID. Now, there is a few things, the slump of the pound, the economy, perhaps a recession into the future. These are things to consider when looking at any company, but especially for this one, we'll delve into their financial health here. Assets to liabilities is pretty much spot on in the short term. Pretty good for long term though. They have actually had an increase in debt equity ratio. They were pretty above that in equity. But debt isn't a bad thing. A lot of people are very scared of it. But when a company uses debt correctly, it can be very, very powerful for growth. Balance sheet, not too bad again. 1.4 billion in debt, but as you can see, they have an awful lot of other things. Accounts payable, they've cash, short-term investments, and their physical assets. So I think it's not too bad at the moment. Down to the dividend, they're 3.3, so 3.2, yep. Industry average is 4.3 in renewable energy. Now, it is forecast to go up in the coming years, but I want to see their dividend per share. Now, as you can see, their dividend yield has been up and down depending on the share price, but their dividend per share actually decreased all the way to 2017. But after 2017, you can see they increased their dividend per share year on year, which is a fantastic thing to see. Provided they continue that over the coming years, could be a really handy pickup, especially considering the yield. The yield was at about 5.4. Now it is down because their value has went up. So food for thought and things to consider. Cash payout and earnings payout, nothing here is bad. They're not over in any of the ratios. We can go down to ownership. There has been a wee bit of a sell-off of some inside individuals, but no institutions or companies. They're actually owned 93% by institutions. Top one being BlackRock and then Invesco. So yeah, something to notice. Right, over to the intrinsic value. I love using Alpha Spread. I probably will end up buying the full version, but at the moment I still have the free plan. It calculates intrinsic value. Now, intrinsic value is a massive not a massive formula, a complicated enough formula, but you can look here and it gives you a wee bit of an input as to what that is, but you can read more to go really in depth. But essentially what it does is it takes the company's financials and gives you the value of the company based on several parts of a calculation. Let's see if we can see the calculation here. You can go really deep into it, but Warren Buffett and a few other big investors do, quite a lot of investors do use this as something to have a look into a company before you invest. According to the intrinsic value now, base case, it's 76% undervalued. The moment, as I said, it's trading at about £6. They reckon it should be about £24.57 based on future cash flow and a few other things. Best case, even better, and even worse case in intrinsic value, it's still 64% undervaluation. Now that's, as you can tell, intrinsic value and discounted cash flow models, they kind of go hand in hand in most cases. And you can see it is severely undervalued. Now, is that the case? Will it continue to go up? That is a question that you have to make yourself. And, well, the markets will make that for us. Let's go over to Dividend Max, one of my favourite websites. Anyone that has seen previous videos knows I love using it. Now, if you had 100 shares, which would be about £600, you'd got a previous payment of £11.30 and next payment of £8.40. Now, they pay 2 dividends a year, a final and an interim, so one is larger than the other. And we can see here that they've been increasing it, as I said, from 2017. Dividend per share has continued to climb. 10.3 last year was the final, and they are 2 years ago, and now it's 11.3, 7.5 to 8.4. Good to see. Let's see their annual dividends. Yeah, as I said, it was up and down all the way to 2016, but from 2017 they've seemed to have sorted it out, and they're growing bit by bit. Good to see. Okay, what's next? Oh no, that just jumps onto another bit of my YouTube channel. I forgot the Trading 212 is normally at the end, but I put it at the start because they restarted that the share program. Anyway, that is the Drax Group. Let me know what you think as a part of your portfolio. Would this be a company you'd invest in? What's your thoughts on them? Always love to have a wee bit of a discussion in the comments section. Plus, a lot of you have extensive knowledge in every company that I've done a video on, so it'll be great to see. And yeah, I will be doing live streams very soon on, I believe, Sundays, where we're just going to have a general chit chat and have a Discord group coming up to expand the community we have going here. It's fantastic. I love all of you. It's great. And I'll see you all in the next one. Bye bye. And thank you.